My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. With a number of states gradually reopening for business, is it time to bet on stocks that thrive in a rebounding economy? I mean, that's certainly what today's action said. Dow gaining 359 points. The S&P rising 1.47%.
That was easy.
Oh, and the Nasdaq advancing 1.1%. Bye. With many of the biggest losers of the year leading the way. Hey, I say not so fast. Look, we all want to go back to normal. But even after we lift the lockdown, the new normal is going to be very different from the old normal. And I'm tired of the cliche of the normal this, the normal that. But we got to remember that things have changed. For starters, the new normal is a lot less investable. I don't think it makes sense to fall into the gap here or book a Carnival cruise or attend a Live Nation concert. Even as all these three stores, they roared, they're compressed springs, and given how far they've crashed, I think they've got more legs to them. Hey, if I were a hedge fund manager, I'd be buying these stocks for trade and do the state-by-state openings. But if I were an investor like many of you, I would let them run if I was stuck in them and then escape for the stocks we're going to be talking about later in the show. Got to understand, lifting the quarantine doesn't necessarily mean the customers will come back. Even though we're flattening the curve in some parts of the country, that doesn't do anything to solve the sudden spike in joblessness. I don't see any loan growth here. There are millions of people who can't cover their rent or their mortgage payments or pay their credit card debt. These aren't the shoppers and spenders you need to see to justify more than 4 or 5 days worth of this kind of rally, unless we get a vaccine. And as much as there are so many great minds working on that one, you'll hear one later in the show, I don't think we're going to get one in 2020. Look, I get that it finally feels like we're getting a handle on this pandemic. There's a sense that it's time to roll up our sleeves and get things done, aided by those $1,200 stimulus checks. I think it's optimistic. But let's say the optimists are right. Suppose we get a real economic rebound courtesy of pent-up demand and cabin fever. Are people buying the right stocks for the new normal? I know the best way to look at that, as always, what you want to do is you want to be empirical and you want to be based on facts. So why don't we do this? Let's go over to today's biggest gainers, because some of them did not make sense. All right, let's start with one that's a truly coil spring, and it's called Kohl's, KSS. It's up 17%. Now, I'm sure it could enjoy a short bounce as the economy opens back up. Why not? The problem, though, is that you lost the best reason to own this thing. It's one's bountiful dividend. Worse, I think people have learned to live without Kohl's during this period. Easier to get what you need from a Target or a Walmart or, yes, an Amazon. Oh, and they probably have way too much inventory. They'll have to dump that. I mean, you want to buy something off of Kohl's, you buy TJX. You buy Burlington. Not so great for Kohl's. The downfall of a department store chain is often started with the sampling of a competitor. Oh, there's been a lot of sampling in the last couple of months. Second, PVH. Well, that's up 15%. You know I'm drawn to this one because CEO Manny Chirico, who happened to be on to our TV earlier today, he's built a worldwide empire of Calvin Klein and Tommy Hilfiger. Those are great, iconic brands. But I don't know where the momentum's going to come from. PVH needs a real back-to-school season. We don't even know if we're going back to school. I also think there's too much inventory in the system, which is not good for PVH. I can't recommend it. Do think it's bottomed. Third is a tough one for me. It's called Simon Properties. The mall owner is the best house in a very bad neighborhood. I want to stress that they've got a great reputation, and CEO David Simon is a brilliant guy. They've also got a long track record of paying the dividend, which currently yields nearly 15%. But is that a huge red flag? Malls are in terrible shape. I just can't imagine how Simon will get enough rent money in with so many of their tenants likely to go under. On the other hand, though, Simon's stock has already been cut in half, and I don't think his business will be cut in half once America reopens. Mall's bad, but not cut in half bad, at least Simon's malls. Listen, if anybody can navigate a shopping mall REIT through these turbulent waters, I'm going to give it to Simon. This man has paid out more than $33 billion in dividends. That's staggering. I would love to have him on the show to hear about how he'll make the merger with Taubman work. It was a poorly timed deal. It took place right before the pandemic really hit home, but he's sticking by it. Now, listen, if you own this one, you're making a bet on David Simon, the man, not Simon, the properties. But it's been a lifelong great bet, although this is a test of a lifetime. Fourth is one I'm truly worried about because of the financials, this gap. The company just refinanced at a much higher rate than I think it's chain. I think it's a chain whose time has passed. I just don't see what Gap has to offer that's special or different or even necessary. By the way, the prices aren't even that low. Right now, you're getting a chance to sell it. I want you to take it. Fifth is Nordstrom. Do you know 2 years ago, the Nordstrom family tried to take this company private for $8.4 billion. And what did the board of directors special committee say? No, not high enough. Well, I got news for them. Now it's at $3 billion. Oops. I think there's a place for Nordstrom as the last man standing feel about the department store, doesn't it? With Neiman in trouble. But is it worth more than $20? Well, I think it's got a slew of horrible numbers ahead. Frankly, the chain wasn't doing that well before the pandemic, but it's got a saving grace. It's called RAC. It's off-price business. When we reopen, I could see the stock rallying another 20% from these levels. But you know what? At 25, let's skedaddle. Six is Tapestry, the artist formerly known as Coach. Wow, this is tough. It's another one like Nordstrom that's been headed south for a while. Tapestry's got a raison debt problem. I think it could have a bit of a bounce, but no. Later. Seventh, whoa, L Brands, forget it. Unless they can force the sale of Victoria's Secret back to Sycamore, which pulled out of its deal after the virus hit, this one's too toxic for me. I like that Bath & Body Works, smells nice, but it's not enough to offset the weakness of Victoria's Secret. I say stay away. Eighth is Live Nation. Ooh, well managed, but a stretch. I can't think of a better way to spread the virus than going to a concert. I think this one's like the cruise lines. It's in fingers crossed mode, right? I mean, Live Nation's betting on feckless, reckless youth. Usually that's a pretty good bet. Parents don't know what's going on. I think fill some seats. If Live Nation keeps bouncing, I'd be a seller. There's only so much reckless, feckless behavior you can tolerate. Ninth is MGM Resorts. Now, if you want to buy a casino, the one that you should be thinking about is Wynn. They've got a plan to open that I think has got. They brought in Johns Hopkins to figure it out, for heaven's sake. That's the safest, which therefore makes it the best. I don't want to own any casino stock because they need crowds, and crowds are how you get COVID. So be careful. I wouldn't go to a casino right now. I certainly wouldn't own the stock. I do like Penn National Gaming, but that's because of Portnoy. Because Portnoy is a disciple of some of the greatest investors of our time. And I'm going to think of them if you give me the whole show and tomorrow maybe. 10th is Hanes Brands. This one actually is overdone to the downside. Hanes is a profitable company, good digital business, and people are underestimating the free cash flow. And I'd show you exactly how good I think they are, but I think I'll spare you that bit of information. I would bet that they will be a legit all of these. I think this one is a winner. I buy it. But at best, these are winners for trading people. What's worth buying as a longer-term investment? Do you see Home Depot here? Do you see Lowe's? I mean, that's better than all these. I think COVID's going to be with us for some time. I expect flare-ups and disappointments and backfires. I don't know if we're in the first inning. That seems wrong to me. But we aren't in the middle innings, and we still don't have enough testing or masking and contact. You're sick of it already, I know. The bottom line, what's really happened in this country since the lockdown? What drives our belief that things will go back to normal? Some masks, some testing, some physical distancing, and a lot of hope. Now, I got nothing against hope, but it ain't no business investment strategy. So until we get a vaccine, you need to approach this market as though the world has changed. What's worth investing under the new normal besides a couple of big box hardware stores? Well, guess what? I got a list of them, and I'm going to give them to you after the break. Let's go to Bob in Florida. Bob.
Hey, booyah, Jim. It's Bob from Florida, formerly from New Jersey.
Yep, we've talked to each other. This is like third time, long time. What's up, Bob?
Yeah, I think so. I want to thank you again for all you do for us amateurs.
Oh, thank you.
And I'd like to talk to you about a company called Viva Systems, a cloud software solution.
Yeah, that's Peter Gasser. He's fantastic.
Yeah. I've been looking at it in March when I saw it had its phenomenal growth since the early 2018. Then it dropped in mid-February till the middle of March and started moving up, and I thought I might buy some, but I was waiting for a pullback to get a better price. The problem is it just kept going up seemingly every day. It went from 120 to to 190 just since the Ides of March.
I know, but remember, Bob, it just hit its all-time high today. Now, that's good and bad. We love stocks that have relative strength like that. But, I mean, I don't know. I mean, you asked did I miss the boat in it. I'm going to say this. I'm going to say there's a better time to buy it. I'm not going to say you missed the boat because there's going to be another opportunity. But, man, this thing is just... You're not early? All right. The world has changed. I want you to approach the market differently, all right? On my money tonight, NVIDIA just closed its acquisition of Mellanox. Well, there's a winner for you. How does that combination benefit in today's work-from-home world? I got the CEO, Jensen Huang. Then I'm introducing the COVID-19 stock index and focusing on the companies that can work in the current environment, and they're not doing that well today. That's perfect. After oil's breakdown last week, wondering what's there for the commodity, you know I've been negative, but should I stay that way? I think you should stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.